Good evening, everybody. Welcome to the episode number 19 of Business Chunautiyan. Well, most of you who have been keeping track of our events, you would realize Business Chunautiyan started just during the COVID times, when just COVID had hit. And it started with an intent to bring members together to help each other. Little did we realize that would go on for 19 sessions every month, every Saturday, and the last Saturday at 5 p.m. And every month, we've picked up a topic of interest to the entrepreneurs of the air conditioning and refrigeration industry. Today, we have an equally interesting topic that we intend to cover with some fabulous panelists. Today is all about why do multinational companies acquire Indian MSMEs? And that's going to be a very interesting discussion today. Well, before we start, the Refrigeration and Air Conditioning Trade Association is 72 years. Pre-COVID, we started with less than 300 companies as our members. And over the last 1.5 years, we have close to 1,000 companies, 13 committees across the country. What better example of the resilience between entrepreneurs in the HVACnR industry to come together and help each other? Well, today's event has been put together with Sachin Maheshwari. Sachin, hi Sachin.
Yeah, hi Ajit.
Hi. So Sachin's been heading the manufacturing forum at the Refrigeration and Air Conditioning Trade Association. So Sachin, you want to tell our viewers how this forum came up and what are the activities the forum's been doing?
Okay, so Ajit, the manufacturing forum it's still, I would say, in a very early stages where we started this in April, but there has been a huge momentum on this where we are, I think more than 200 of us are already connected and have been driving multiple agendas related with the MSME benefits, the GST aspects, and I would say one of the major element has been on the training side and the webinars that we've been holding. We started with a series on business masterclass, the MSME acts and benefits, the RXIL discounting options for our MSMEs. We had a series on ERP solutions, which was one of a major requests from all our members. Then we are currently conducting a series on lean manufacturing practices, which has again been taken up very well by all our members. We had a webinar on metal hedging, trade insurance, the HR aspects, the legal aspect, the sales. So covering practically all the aspects that get involved in our business as an entrepreneur. And I would say that today's panel discussion is part of the training exercise where I'm sure our members would get an insight on, if any of them are aspiring to, at any point of time sell or monetize their business, or they're looking to expand through the acquisition route. I'm sure they're going to get a lot of insights from our elite panelists who are there. Incidentally, this topic of, you mentioned that I initiated this, and this topic is actually quite close to my heart because this was my first job profile. So right after my MBA, I was taken by the Escorts M&A division, and I was fortunate to work there for about close to 2 years, getting involved in many of those M&A deals. And also, as I would say, as Carrier, we were one of the first companies to get in some kind of an exposure in this area much earlier. So I'm really looking forward to this one. Let me kickstart today's panel discussion by introducing our first panelist, which is Mr. Devraj Singh, the Managing Director of Flag Group India Private Limited. Welcome, Mr. Devraj.
Hello.
Yeah, I think you need to unmute yourself.
Hello. Yeah, hello.
Okay. Yeah, Mr.
Yes,
Devraj.
Yeah.
So I'll just briefly introduce yourself, and then so I have personally known him for now more than 12 years, and he has been diligently driving the Flag India group and have really transformed the manufacturing setup, including the ex-Carrier setup, into a world-class level. I think that hats off to you for driving this. I would really request him to share more about his company and the M&A journey that Flagwood has gone through, especially in India.
Yes, thank you very much, Sachin. So we acquired this company. We acquired Carrier in 2009, and I have been with the Fleck Group or the Carrier company we acquired since 2009. But Fleck Group has been in India for last 6 decades. Historically, our business was focused on air movement. However, with business acquisitions, we diversified in air treatment and air conditioning as well. So air treatment came from Carrier. The diversification of the business was in line with our other group companies, and they are building the business synergies globally. So that was there. Our holistic strategy while acquiring any company is mainly to target companies that would add the value to current product positioning, while the value system and culture of the company is further enriched. So as of now in India, Fleck Group is focusing on four verticals. First vertical is the product called air handling unit. Second product is axial fans, and third product is precision air conditioners, and fourth is the product for marine oil and gas. So we have four product line for four applications, different applications and critical applications. So that is the product line we have. We acquired a company called Carry Air in 2009. Uh, that was mainly for life science application, and that is going really well. And yeah, and
So
then
good to hear that, Devaji. Good to hear that. Yeah.
yeah.
Okay.
So yeah,
Okay, so let me
and
also now bring in our second panelist, Mr. Ashok Das. He's the managing director of System Air India. He's a well-known personality in HVAC trade. He's also currently the board member of AMCA International, which is indeed a proud moment for India. I think, again, I've been closely interacting with him for more than 10 years now. So, incidentally, that's the best part of today's panel discussion, that I think I know most of the panelists very well. Incidentally, they're a customer for me. They are competitors, but more than that, I think they are very good friends for me. So that's the good part about today's panel session. Welcome, Ashok. So, Ashok, can you hear me well?
I'm sorry for that. That's from my side. Thank you, Sachin. Thank you so much for introducing me.
Okay.
Good evening. Yeah,
Sure,
Sachin.
Ashok. So, Ashok, System Air has really made big inroads in the country through the acquisition route. So, I would request you to please take us more through that journey and talk more about System Air.
Thank you. Thank you so much. First of all, I would like to thank Rata for inviting me to be a part of this session. Good evening, friends. My name is Ashok Das, as Sachin mentioned. I'm representing a Swedish. I'm really sorry for this. I'm representing a Swedish a company called Systemair, being responsible for the Indian operations here. Talking a bit about Systemair, we are a company formed way back in 1974, having a history of almost now 47 years. I can tell you. We are present in more than 54 countries across the globe as Systemair, having 29 production facilities in 20 countries. I mean, that's our global presence. We export to more than 135 countries across the globe, having a employee strength of around 6,500 people in the group, and the annual revenue of around 850 million euro. So which is close to around 7,400 crores in INR, just to put it to you. We are not a family-owned company. We are a listed company in the Swedish stock exchange. We got ourselves listed in the year 2007. And talking a bit about our Indian operations, we have two manufacturing facilities here, and Systemair India is a 100% owned subsidiary of Systemair Sweden. So we have two manufacturing facilities. One is in Greater Noida, which is acting as a head office of Systemair, and another one in Hyderabad. Total around 18,000 square meter area production, with 9 sales offices across, with an employee strength of around 460 people here in India. We started our operations in India way back in 1999. I mean, that was through a distributor. I mean, that has been the strategy of Systemair globally, that we always start our presence in any region through a distributor segment. And it was in 2006 when we decided to start our own sales company here. So 2006, we registered ourselves as Systemair France Private Limited. I came on board on 2007. So we built a team of around 15 people, primarily focusing on sales and marketing activities to support our distributor. That was our first step we did in 2006 and 2007. And 2009, as you mentioned, we got an opportunity of getting into an acquisition with a company called Ravistar, which is that time, one of the leading manufacturer of air distribution products in India. And in 2011, another Asian manufacturing company called IEPL, which was a part of Suvidha, who are primarily into contracting. So after these two acquisitions, we kind of integrated our entire business under one roof in 2013 and 14. We opened our own factory, and mainly we manufacture three business segments in India. One is air distribution products, the ventilation fans, which covers inline fans, roof fans, axial fans, tunnel fans, etc., and also the air handling unit, which is one of the biggest business segment for us in India. And to directly answer to your question about our strategy behind acquisition, during those years, especially 2006 to 2010, I can tell you that Systemair has been in a kind of a shopping spree or an acquisition spree during that time. And that is a part of the management's aggressive growth strategy. They have a very aggressive growth strategy, and one of the segment or one of the area of focus was Asia, and they choose India to be one of the destination than China, because I can tell you, Systemair doesn't have any operations in China comparing to any other European company as of now. So they took India, and that's the reason they went for two acquisitions for a rapid growth. And acquisitions always give us an opportunity for quick entry to any market with a kind of a stable and existing customer base, and that that was the main strategy behind the acquisition. Thank you.
Yeah. Thanks, Ashok. It has indeed been a remarkable journey for you guys. Let me now move over to our final panelist, Mr. Prashant Joshi. Welcome, Mr. Prashant. He's the president of HMX80 Enterprise. He's a seasoned veteran in the industry with over 28 years of experience, earlier working with Kirloskar Chillers. So welcome, Mr. Prashant, once again.
Thank you. Thank you, Sachin. Thank you.
Sure.
Thank you for this opportunity to Rata. Thank you very
Great.
much.
So, Mr. Prashant, 80 is a great example of an Indian MNC which has really expanded operations worldwide through the acquisition route as well. So, I would request you as well to please share, the history and the journey so far.
Sure. Thank you, Sachin. Thank you, Rata, once again. 80 Enterprises Private Limited, as the name of the enterprise goes, is about 80 years or more than 80 years old, privately held company. It was established in 1934. 80 was basically founded as a part of India's freedom movement. The idea was to sell high-quality German textile machinery to India, especially when the British monopoly ruled the field. This endeavor helped in modernization and growth of the Indian textile industry, which now holds a very strong position in the world. 80 today is also recognized as a leader in textile engineering in India, offering end-to-end solutions across the entire textile value chain. But today, the textile business is only one part of 80's businesses. 80 is evolved into a multifaceted engineering group offering world-class products and solutions, spanning several other segments as well. 80's businesses encompass not only manufacturing, industrial sales, distribution, but now has gained expertise in handling turnkey projects as well. So if we look at 80's other businesses, they are divided into total 6 verticals: the textile engineering, the original one, the wastewater vertical, wastewater treatment vertical, which is into comprehensive range of wastewater treatment and recycling solutions for industries as well as municipalities. And this is a joint venture with a company called Uber from Germany. Then the flow technology business, which deals in efficient liquid transfer solutions for various industrial applications. This is a diversified business, diversified somewhere around 1970s. The cooling and heating business, which is the HMX, which handles the energy efficient fresh air solutions for space or process cooling, and also has the concentrated solar thermal solutions for industrial process heating. This is a business which ATE acquired in 2012. Then we have value-added equipment for textiles, print and packaging, which is basically handling viewing and inspection in ink conditioning, electrostatic control. Again, this is a part of this business was a diversified business, but part was acquired again around 7-8 years back. And then the last one is the intelligence of things, as we like to call it, rather than just Internet of Things or IoT. Because we do slightly more than IoT, we bring in the wisdom from the data in things for sustainable growth and profits. Again, this is an acquired business for ATE, which is called as the EcoAccess business. Basically, if you look at the history of ATE at the start of the 21st century, the third generation of the family took over the reins of the management at ATE. And for this generation, the strategies going forward were to build on the businesses ATE had been in, but also go further in achieving societal objectives. Well before green became a buzzword, ATE decided to build up environmental businesses. Moreover, ATE thought it right to invent in India and set about creating original and sustainable products and solutions. All the 3 acquisitions of ATE, HMX, Valence, and EcoAccess, are all homegrown businesses, eventually becoming a part of ATE. And so since the beginning of 21st century, ATE has developed not-in-kind technologies and deployed products in wastewater treatment, eco-friendly cooling and heating solutions, IoT, and many more. It is also respected for its value-based operations and builds deep relationship with all its stakeholders. The group is also deeply committed to societal well-being and has been working on achieving social goals through its businesses. And I'm proud to say this, that one such target is making all the ATE businesses net zero energy and water businesses in coming 10 years. Thanks. Thank you, Sachin. That's a brief about ATE.
So truly inspiring. And as I mentioned, to see this the way, I mean, there are not so many stories of Indian MNCs really, moving up the value chain like the way you guys have done it. Right. Okay, Ajit, I think I would request you.
Well, amazing. I think that's fabulous. I mean, we've got 3 brilliant panelists. I mean, now it's time to deep dive and get into all the questions that we've received from a lot of our members around here. So I'm going to start with Mr. Devraj. Mr. Devraj, I know you say that you acquire, so that's a quick pathway up. Is that the only reason that you just go out to acquire a company? Because in most of the places, you guys are market leaders, right? You're a global company, you're market leaders. Why wouldn't you just come in and set it up yourself? And you've got the resources, you've got the money, you've got the technology, you are a market leader. Why acquire? Why? What is that strategy behind it? You're muted. You'll have to unmute yourself.
Yeah, thank you. Sorry, I missed that. Well, so this is really a tricky question. The buy versus build decision is always a tricky one. So in case the last acquisition we did in India was Carrier. So in case of Carrier, it was a right choice because not only the nature of the business matched, but the company aligned many more important aspects. And that is the key. When we see the aspects are aligning, then we have to go for the acquisitions. Otherwise, we can go to build it up. So in case of last acquisition in India, that is Carrier, we found that the vision on maintaining good quality, high product quality was matched with Carrier. That was one reason we went for that. And then we were also looking for the product which can fulfill the requirement of critical applications. So critical applications like life science, we were looking for a partner in India. We found that Carrier was the company which was well known and established for excellent product quality. And they were the one we were hearing those days. They were the one who started first time in India the double skin panel for AHU. They basically invented in India. So I mean, they were always focused on good quality and innovations, which is a key to focus on high-end and critical applications like life science. So that was another reason. And then when we are acquiring any company, we are also looking for the availability of strong service network, and then we found that it was readily available with the company we acquired, Carrier. And another aspect we always look, our company always take care is the people. So that the people we are going to work with them. So finally, people of Carrier whom we saw as a really strong team and then would be a huge asset to our ongoing business aspects. So that was another reason. So when we have an option to go with a ready package, we found in terms of Carrier, it saves time and effort to build the same again. Having right people is always a major challenge, and then we often struggle to find out and hire talented people for key positions, even for any positions. And that is a common problem for any industry. Coming to HVAC industry, the problem becomes further bigger due to the complexity of HVAC, and this is a kind of niche market. So if we manage to find out and hire good talent, then the major problem is resolved. So with KDER, we found yes, we have a good team, talented people with us. So then it will make our journey easy, and then we can achieve our objectives. So with this decision of buying versus building, we were clear that we would be able to channelize each other's strength to reach faster where we wanted to go in the market in India. Philosophically speaking, we treated this acquisition more like a merger wherein the best of both worlds, Flex brand and Carrier technology, were brought together. We feel proud to state that we almost retained all the people we acquired with Carrier. So we feel that these are the reasons we found some time good to go for the acquisition. Thank you.
Wow, amazing. That's good. But I have a question. Sachin, you think we are second generation entrepreneurs, and in India we build business to pass on to the next generation, right? And that's the traditional approach. So you think in India now we are coming of age and saying that let's build to sell? You think that's happening?
Yes, I would say that's. I mean, I would say in our HVAC space, it's not something that we have seen so much, or I would say in a lot of these capital goods or the manufacturing-based areas, we haven't seen much. But if you see the service sector, I mean, that's how, in fact, the initial vision of setting up, and a lot of the startups which are setting up to reach a stage where they can sell it and really monetize their effort. So yes, for us, it was a decision which was more of a strategic decision rather than rather than a decision where we really had a succession issue, or we had any other kind of challenge. So I would say more and more such things would happen because we are seeing this especially on the service sector.
Amazing. Yeah, I guess so. With these unicorns being there left, right, and center, I guess everyone's mind is going to change. That startup ecosystem is also going to affect the brick and mortar system. All of us are going to think that, hey, listen, I need to catch up there too. But let's understand this process of this. So I'm going to talk to Ashok Das. When you acquired those two companies, whether it's Suvidha or the Ravi Star, how did you go about this whole process? And how did you actually identify that these are the perfect fits for your acquisition or for your strategy? How did that happen?
Yeah, as I mentioned, we till 2009 we were a very small kind of a sales company. doesn't really have any kind of a manufacturing setup and a small team. So the easy way to get a access and to scale up in the market is, to go for aggressive, acquisition strategy. So Systemer is a company which is having very aggressive growth strategy, and there are two ways of going with it when you talk about the growth. One is organic growth, which you get it with the sales, what the increase in sales what you get, but the other one is inorganic growth, which comes from the acquisition. So when a company is having a very aggressive growth strategy, the only way to achieve that growth is by going for acquisitions, and we have been doing that over the years. We have been very successful globally in acquiring as well as integrating that business in a very successful manner to our business. So all the acquisitions in Systema has really fueled our growth over the past years. I mean, if you see the history. So we talking about that period which you mentioned, 2009 we went for the Ravistar acquisition. 2011 we went for the IEPL acquisition that was a part of Suvidha. So we did ideally two acquisitions in 2009 in Asia. One was a company in Malaysia called Medcool Technologies. They were primarily kind of a subsidiary of FLAC that time, manufacturing the fans. And presently, we bought that company. It was a 100% acquisition for us, and presently that is operating as a warehousing hub for us in for the Southeast Asian countries. And the other acquisition what we did was the Ravistar, as you asked me. And Ravistar was a company which was partly owned by Blue Star. I think we all know Blue Star. It was partly owned by Blue Star and partly owned by an individual stakeholder. And I think it was more from Blue Star that they would like to come out of their allied product division, which was related to their contracting business. Because in India, it was more like most of the contracting companies who have kind of started have their own product division as well to kind of complement the sales to the contracting. I think that was a period when most of the companies tried to came out with those business segments, take it HU, take it air distribution products. So Blue Star was using it more for their in-house projects. I think initial days it used to be more than 50-60%, but later the share came down, and that was the time when they decided to kind of exit. And we, if you ask me, I mean, as I mentioned before, we took it as an opportunity because we would like to scale up in India, and we went for that acquisition. It was kind of 100% acquisition for us, and with that, it came two manufacturing facilities, one in Noida and one in Hyderabad, and also it opened really doors for us to a huge customer base. So that was really helped us to kind of sell our other products along with this segment. So after this acquisition, as I mentioned, we were before having a facility in Alwar in Rajasthan. It's an assembly facility, one in Noida. So we were thinking of kind of going for a greenfield project to build something on our own, to put all the manufacturing under one roof, because it is very difficult to handle different manufacturing setups. And that is when the opportunity of IEPL came in. And the biggest attraction behind that proposal was that the company was owning a land of around 5 acres in Greater Noida. They were having a very small factory, and that was the time when we were planning to build our own greenfield project. And for a European company to establish or buy land in India, you can imagine how tough it will be. So one is for sure we get an opportunity to add another product portfolio, which is air handling unit, which we were not into. We were primarily into fans. We added 2009 the air distribution product segment. In 2011, when this came in, we took it as a big opportunity to add the air handling unit segment. Plus, the land what is available along with the company. When you buy this company, the land was a part of it. So immediately after the acquisition, we built our own factory there in 2012. 13, we kind of integrated all the three facilities in North India under one roof. So that was the biggest, I would say, biggest advantage for us to really go for the second acquisition, which has really proved, very well for us.
Amazing.
So Ashok, Yeah, Ashok, I
Go
want
ahead,
to
go ahead.
reveal one internal information. Since now more than 10 years, we were one of the bidders for the Ravi Star business as well. But of course, you outbid us, and that's how we moved out. And that was one of the driving force for us to exit out of the HU business, because we wanted to consolidate ourselves stronger on the ADPs. And so I think I never shared this
Yeah,
with you,
yeah,
but I thought since we are discussing today,
yeah,
let
yeah,
me
yeah.
reveal this.
Yeah, yeah. No, it's good. I'm aware about it. I mean, I've been updated
Okay,
about that.
that's fine. Sure.
Thanks, thanks
Yeah,
for
well, that's
bringing that.
amazing. I mean, having that. I mean, what I really my biggest takeaway was, that very few people really realize that, when that asset, that land that you owned, could have been one of the reasons to actually acquire that company. And I guess that's a big takeaway, because most of the traditional entrepreneurs tend to build businesses that way. We like to acquire assets, and that's how it goes. Amazing. Now let's move to Prashant. Prashant, your acquisition is a little different from the others, but how did you see this alignment with AT coming in, and what were those big takeaways especially when it came to the workforce, and what actually got you together to work with ATE in terms of, how do you actually leverage the combined strengths of both the
Okay.
organizations?
Okay. See, basically, as I said, go green philosophy. The HMX business actually ticked all the right boxes for AT to acquire. The technology that HMX had developed was not in kind. It was green technology, was sustainable. And if you look at it from today's perspective, it was also based on 100% fresh air for the conditioned space. So AT actually started with an investment in HMX. It was not a direct acquisition. AT initially invested in HMX and acquired a management say. HMX was basically started by technocrats around year 2000, who had a vision about indirect evaporative cooling and had developed the technology. However, in those days, like most of the startups used to fare, the initial funding dried up very soon, and they were in need of additional funding. The product was good. The application of the product in industrial cooling was picking up. But then to scale up the operation, the founders needed more capital. And on the other hand, those days, AT, in line with the dreams of its new generation management, were scouting for not in kind, green, sustainable technology. So the marriage was obvious. In 2008, AT invested in the HMX business and acquired a management stay. And it became actually a joint venture of AT to start with. So if we fast forward here, the process of initially gaining management say before acquiring it completely reduced a lot of problems and heartburns at a later stage in aligning both the businesses. HMX, when AT acquired it, was a very small business, and like many startups those days lacked any formal processes or systems. The founders were more busy fine tuning the products and technology, obviously, than setting up processes and systems. Establishing the product lines, creating the desired markets for these products were actually their focus areas. HR policies, manufacturing excellence, financial discipline were not really on the radar. On the other hand, AT being in business for 70 long years then, these were all part of the formal management process. So initial days of investment and management say AT did a lot of setting up of the house in order on these matters and also establishing the brand HMX in the market. AT was an investor in in HMX for about 4 years before it bought it out completely in 2012. And during these 4 years, the focus for AT was two-pronged, establishing HMX brand and the IDEC technology in particular in the market, and get as much as the internal systems and processes aligned to AT. So actually, the work on aligning the HMX organization to AT philosophy had started much earlier than the actual merger, and hence I would say that the process was a bit easier than the direct acquisition would have been. I'm sure that many in AT who actually worked on this those days would not probably agree with me. But overall, if we look back, the merger has delivered the objectives it was for. Another important step taken by AT post HMX acquisition was patenting of the technology. AT invested in getting patents for the Dama heat exchanger, as it is known nowadays, not only in India but also in US and Australia. So if you look at it today, AT owns Dama patents in India, US, and Australia. If we look at the overall alignment, overall amalgamation, if we look at it that in that perspective, HMX had the technology, and very important, AT had the willpower to leverage this technology. I think this was the most important factor in AT going in for the acquisition, and also this acquisition becoming a success. And that has helped in overall the IDEC technology also to get established in the market. Application support for technology, manufacturability of the product, financial strength to wither away the ups and downs of the startup actually were provided by AT. So the strategy for AT was to establish the technology and provide the financial support and streamline the operation so as to bring in discipline in doing business, a very important factor, if you ask me, for any business to succeed.
That's amazing. Yeah? Fabulous. And I guess, and as you rightly said, the AT was already working with you before they actually acquired the entire company. Awesome. Let's dive into the next set of questions here. Sachin, you've got over to you for that.
Sure.
Industry specifics.
Okay, I think we would now like to focus upon some of the aspects which could be a good learning for our for our audience, for our aspiring entrepreneurs, who are probably exploring this possible route of M&A. So I would first be requesting Mr. Devraj. Mr. Devraj, you did talk about the broader outlook that you looked at, while acquiring something. But I would like you to further expand upon that any company which is really an Indian company preparing themselves for sell-off or for potential acquisition, what are those finer attributes that it should work upon, to be better prepared? And when and I also wanted to understand from you that when you look at acquisition route, what kind of challenges did you face in identifying, potential companies? I mean, is that a big challenge in India, that if somebody is looking for an acquisition, you don't get many options available? So that's just wanted to get some insights from you on this.
Yeah, thank you, Mr. Maisiri, again. So this is very good question. There are many key factors that any company will look while they acquire another company in any country. Now coming to India, so the key factors we considered when we acquired the company in India are many, but I will say a few factors here. So what we thought was that product synergy and leverage, it is going to provide us the company we are going to acquire. That was one key factor. Second key factor we were considering was market positioning of the company being acquired. What is the positioning of the product and the brand value in the market? And then the new brand we are going to acquire should expedite the market access and service network for the growth purpose. That was another factor. We were also looking for better technology and advancement of skill set with right and talented people we are going to have. And then continuing with world-class quality standards as envisioned by Select Group was another key factor. And then alignment of value systems, that is also a key factor. Select Group has been considering that what is the value system of the company we are going to acquire. Is it going to match with our value system or no? So that is another factor. So overall company performance would improve with any acquisition on various parameters, like I said. And then ultimately it should give us increase in the market share where we are going to acquire the company, in the country we are going to acquire the company. We should be able to increase our market share. It should accelerate the revenue growth and improve our margins and operating cash. So these are the main key factors. So second thing you said that challenges. So when we talk about challenges, we always seek answers for how this merger will impact our product and technology. Success in acquisition is possible when a right company is identified, and this is really challenging to identify a right company which is going to meet your key factors, as I said. So, main challenges in finding a right buy, what we found is product and market positioning of the company which we plan to acquire, that we see, and company that would give financial advantage, product and supply chain synergy to the group. And then with these two factors, another challenge we always consider is cultural capabilities, competencies, and the ethical values of the company we are going to acquire. So these things normally we consider when we acquire the company and the challenges we faced.
Okay, that's wonderful. I think wonderful insights. I think you covered many, many critical aspects, which I think anybody who's aspiring on these lines should really take care of. I would like to bring in Mr. Ashok as well now. And Ashok, I'm sure our audience would keen to know that post acquisitions, what are the kind of challenges that really, I mean, one faces, and you've done two of those. So what were the real challenges post acquisition to really bring that integration and the and that whole merger process in place?
Yeah, I can tell you, being a part of both acquisition process and post acquisition integration, I can tell you, Sachin, directly that acquisition is the most easiest thing what you can do. The actual work really starts post acquisition. The signing a deal is the most easiest thing, and after that, the actual work really starts after that. So, the companies who are into this acquisition spree, they have good people who really understand the business, the local culture, and as Devraj mentioned, the ethics and the local, people. I mean, that is the most important thing to be to make the acquisition really successful. So this will really, help in, the successful business integration. I mean, if you have the right people who are assigned the job of post-acquisition integration of the business. So most of the companies look for companies which can be easily integrated to their existing stream or existing line of business, and that's what they always look at. So there are the various reasons. Normally, one sells the company. I mean, one, it could be like there is they don't really find a good potential in the future for that kind of a business, or there are no legal hires, for example, for the owners to take over the business. That could be another reason. So there are different, different reasons which come into picture, or sometimes it could be a loss-making entity which they would like to really get rid of. So there are different things. One, when a company look for acquisition, people look at different aspects. Different companies look things in a different way. I mean, what their requirements are really. So one can only term the acquisition successful when the company has been successfully integrated to their existing business system, and also it has been really scaled up. So if you ask me, I can tell you there are three stages post acquisition. We normally say clean up, stabilize, and scale up. So these are the three steps normally comes post acquisition. The cleanup process is the most, I would say, most toughest one, time consuming one, most challenging one, where you need really skilled, talented people on that process. So in I mean, first and foremost thing, as Devraj mentioned before, is the to win the really the confidence of the people. I mean, who has been with the company for a longer time. So to have a clear communication, because normally the acquisition process happens in the backdrop, and people are, most of the time people doesn't have an idea really who is going to be the buyer, what are their plans really, and how I'll be treated, or what will be my future in this company. And there will be a lot of questions which kind of tend to be unanswered by the existing owners, because once they get out of the company, especially when it comes to 100% acquisition where they just sell and move out, good entrepreneurs normally also make sure that the buyers are taking care of their employees. So this is something which we treat as very high value. The people are the biggest asset of any company. So we need to have a really clear communication on at all levels, not only at the top, mid, or executive level, but even to a worker level. We should have a very clear communication, establish contacts at different levels to clear all the uncertainties which are in the air. That's something which we have to do at the initial phase. And once you're successful on that, I think you can treat it that your job is half done. You have the team in your control or in your confidence. Uh, so I can tell you. I mean, after this, the cleanup process starts. The cleanup process is that you need to check the product portfolio, what the existing company is having, and as I said, every company has their own strategy. People normally don't look for brands because the company who acquire have a much better brand value, and they will try to bring in their own product portfolio to that particular business. So they have an existing setup wherein they can easily integrate or bring in the new product. But if there are very good, niche products available in the existing portfolio, you will have to do a product development. You will have to do the documentation. You have to do the certification, which is really a time consuming part. And this takes longer time really on the product side. To develop a product or to integrate the group product into a local strategy is the most time consuming part. This is not something which you can measure. So you really need to have a management which is really patient, uh, which is giving you time really on this process. And once you successfully integrate that product, and the resources what is required, then you can run really the company in a very successful manner. And that is what we call it as a stabilization phase. Clean up, stabilize. And once couple of years the company is operating in a stable manner with regard to resources, manpower, product, and infrastructure, then the next step is really to scale up the business. So if I would say, if I look back, I mean, we have been really successful in doing this in both the acquisitions, and we are really happy the way it has been progressed for us in India.
Okay. Thanks, Ashok. I think you've really covered this very well, and I think the 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 key aspect of that communication and getting the new people's confidence into the system is, I think, what is a very vital and aspect which you highlighted. Okay, I would now bring in Prashant, and this one I believe is a very interesting question for our audience, as this would involve finance. I think I would like you to give our audience a general idea about the valuation mechanism, which is generally being adopted in any acquisition deal. I think a lot of our MSME companies are still not so familiar with with this mechanism. So if you could share some insight, I think that would really be useful for all our audience
Sure.
members.
Thanks, Sachin. Definitely. Let's I think start with how the valuation story unfolded for AT and HMX. Basically, at the time of investment, HMX was a very small business. We are talking of year 2008, when with just 8 years of the startup being in the business, but the business was in a struggling mode, as I said, and it was a very small business that way, with a very small workforce, not too much of a top line, and practically no cash. So the valuation was obviously an easy thing for AT's, from AT's point of view, obviously, and the valuation was basically for the technology, because that's what AT was looking in the acquisition of HMX. On the other side, the founders were in a dire state financially, and were in a urgent need of funding to keep the business going. So AT provided them that funding. So fortunately, AT understood the importance of the HMX technology and offered the financial lifeline that HMX was looking for. Post this partnership and then after the merger, AT continued to invest in the business. Even the latest investment coming just about a couple of years back when AT invested in a large factory, new factory in Ahmedabad. If we go back to the valuation part of it, there are multiple ways valuation would normally happen. Many times, if competitors, especially if competitors are acquiring business, the valuations could be different. If it's a large company acquiring a comparatively smaller competitor of its, many times it's like for killing the competition. You have one less competitor in the market, obviously. On the other side, it could be for inorganic growth, because when you buy a company, when you buy your competitor, you buy the customer, or you buy customers along with it, buy market share along with it. So if it's for market growth, if it's for increasing the market share, the valuation would obviously be based on what increased top line the new business brings in, and along with it, what increased bottom line will it bring in. Others could buy it for infrastructure, like Mr. Ashok said, they bought it for the land. So that's an important aspect of valuation. It could be for the manufacturing facility. It could be for service setup. It could be even for a sales setup or a sales reach, a sales infrastructure that a company could possess. So, and in our case, probably it was technology. But if you look at the valuations, what Google did for Motorola, it was basically for patents. It's technology plus patents. So valuation could be basically, you cannot generalize these things, I would say, but it would eventually be what the buyer is looking at and what the buyer is intending to achieve from the sale. So that's what I would say as a generalized statement. You will have to assess the situation based on the particular case which we would be getting into.
Sure. Okay. So, Ajit, would you like to now take over the last leg of the session?
Yeah, let's take some messages for our members. The last
Sure.
closing members. So I'm going to get, let's get good messages from everybody. So I like to start with Mr. Devraj. One is, we all understood why you want to acquire MSMEs. You got into the market. You got a strategic advantage. Everything. But why do you see that? You continue to do these acquisitions, especially in a market like India, which is waiting to grow at a phenomenal pace over the next 2 decades. So do you still continue to acquire, and why would you still continue to do that, and what are the kind of things that you're looking at?
Yeah, thank you, Mr. Ajit. So, what we see that in India in recent past has seen great potential in case of mergers and acquisitions, and therefore India is becoming a highly sought after destination for merger and acquisition deals. The volume of merger and acquisition deals has been trending upwards, particularly in the field of pharmaceutical, FMCG, finance, telecom, automobile, and metals. And yes, the scope for HVAC industry is also very good. That is what we see. However, HVAC industry's landscape is going through changes, and then we see already now in the market that there will be consolidation in coming years. So consolidation is going to happen. That will further, I will say, support the acquisitions. Companies will come together to become more strong in the market. Various factors which lead to this robust growth of mergers and acquisitions in India are also driven by favorable government policies and confidence building measures like government betterment of ease of doing business index and other policies changes, which has built confidence of multinationals like us to invest further in India. And then with this, we see that there will be further acquisitions to grow further in Indian market. Now, the question is, why multinationals take the acquisition route? So, if I categorize these things in 4 parts, so One will be right to entry, acquisitions that take place mainly with the purpose to gain access to bigger and developed market across the globe. That is point number one. Point number two, we see technology transfer. So corporations also require technologies to manufacture particular product or a service which is not available in the country. In that situation, by acquiring or by collaborating companies abroad, they get access to the technologies. And third point I would like to add here, new product mix. Many times it is not profitable for the companies to manufacture products themselves, either due to cost constraints or requirement of huge investment in the product development. In such a scenario, alliance with another company can give them the right to sell and diversify their product range. This is point number three. Point number four here I would like to add is hedging country risks. Here, mergers and acquisitions are also attempted to reduce the reliance on the market of only one country and escape the local business cycles. So these are the points we see that it is good to scale up the business through the route of acquisition. Yeah.
Amazing. Absolutely good. Very really informative inputs that you've actually given in terms of the acquisitions that can still continue to happen in the Indian HVACnR segment. Mr. Ajugdas, I want to ask you in our space, in the Indian space of HVACnR, which are the areas do you think there is a potential for acquisitions, or you would see kind of changes, mergers and acquisitions happening in our country?
Yeah, Ajit, I can tell you, I mean, the companies, as I mentioned before, which are having aggressive growth strategies, they will be in constant lookout for possible acquisitions in emerging market. So this is going to happen, and they are in constant lookout for that. So they look for business, as I mentioned before, which can easily be integrated to their existing portfolio or their existing business. So India is a potential growth market for many international players or international companies in HVAC and industry globally. So the companies who have strategies to expand in Asia will have India on the top of the list, apart from the Southeast Asian countries like Vietnam, Thailand, Indonesia, and so on. So India will be on the priority list if they have aggressive growth strategy to expand their business in Asia for sure. So as Devraj mentioned before, the rise of the ease of doing business in India, the index that's going to help a lot of international entities in a big way to make India as an attractive destination to expand their business. So, in my point of view, I can tell you we can see more acquisition happening in the coming years in different segments in HVACnR in India. And I mean, we personally being from the ventilation and air handling industry, I'm pretty confident that you will hear more acquisitions in ventilation and AHU segment in India, because AHU segment and ventilation segment is something which is really a need of the hour, especially due to this pandemic. The need of ventilation has gone up, and I'm pretty sure the regulations, what is going to happen or what is going to come in India with regard to the minimum ventilation requirements, it's going to further fuel the growth of the ventilation industry in India. So I can tell you, you will find more and more companies looking for right companies here in India to fuel their growth strategy in the coming years. And just a tip to the people I mean who would like to go to this stream. I can tell you what a company is looking for when they look at a company is, for sure, there should be an attractive product portfolio. It doesn't need to be a vast portfolio, but whatever you have should be kind of an attractive, very attractive portfolio, having a good quality product, not really high quality product, because you kind of you're operating in India and the price level is like that, so they don't really look at a high quality product, but for sure they should have a good quality product and an attractive product available with them. Stable customer base, this is something which people look at. And also, as I mentioned before during my first talk, the infrastructure, what they are having, the factory infrastructure is going to be an attractive factor when people are looking for possibilities in India. The stability in the profitability for sure it's going to be an icing on the cake, and also the good work culture in the company and profitability is going to add up to the valuations. But if you really take care of the first segment, I think you can make yourself really attractive to the people who are really looking for potential acquisitions in India, and it's going to happen.
Okay.
Amazing. I guess.
Jeet, I think I wish to add on this that I also see that with the lot of requirement of the electronics and controls in our product, I expect that some of the HVAC companies would start looking at uh, you know integrating this kind of an aspect, because that's some one area where I don't think we are an expert, but it is really required to be part of the product. So I see that as one important area in this field. And also I see that with the with imports becoming a bit of a challenge, I also see that some of the uh, the bigger unitary companies and all looking for some of the critical component suppliers with the we're having some technology advantage kind of a thing. So these are other areas which I see has a potential, especially or which would attract people. And another area which I wanted to highlight is that, especially in our kind of a business, which plays a very vital role, is today, uh, especially in our commercial building business, the your approval levels on the with the consultant. That's a one for any new entrant, for a new brand to come in. The biggest challenge is to get your product specified with maybe, I don't know, 500 plus consultants all over the country. To go through that process of getting yourself approved with all of them is a very, very long, tedious task. Now, that is one big because and that's one of the biggest entry barrier, I would say, for any new party to come in the commercial building segment. And that gives, I mean, for somebody who has the right product but needs to go through that whole process, is a long process. So, and that's what drives them towards getting somebody who's already well accepted by all and really push the whole thing.
Amazing.
Yeah, Sajan,
Amazing. Certainly.
I can add to that, and I fully echo your thought. There is a lot of value addition which has happened on the product segments in the past couple of years in India, especially as you rightly mentioned, adding different controls, different connectivity, different IoT possibilities on the product, making it more smart. Conventionally, I can talk about the handling unit. It has been, it has been kind of a CKD where you build the it's a fan in a box. There is nothing else into it. But in the past couple of years, the value addition, what has been happening, especially with EC fans, with controls, with sensors, factory assemble. So, there is, I would say, there is a value addition of almost 3 to 4x, which has happened in the past couple of years on this industry, and that is really attractive for international players to look at this market, as a potential one, as you rightly mentioned. Just to add on.
Awesome. Great. So that is the ventilation market and the AHU. And of course, the consultants play a big role. Awesome. That's pretty good. So last, before we actually kind of wind up and take up one or two questions that just come up, Prashant, what's your take to all these budding entrepreneurs out there in our industry? Would you say that, they should actually, and in fact, it's always known, some of these entrepreneurs are people who are techies, they like to build businesses and they like to be serial entrepreneurs and not be in the whole process of, scaling up and doing everything. And that's pretty common with people who are from a tech background or who are technocrats. What's your message to them? I mean, is there an opportunity that they should go out, build new companies, they will get acquired? What's your message to them?
Yeah, what you said in this in your chat with Sachin, probably entrepreneurs today are looking at building businesses for selling them off. but I'm not very sure whether it's still happening in our industry.
True.
But yes, because I think an entrepreneur basically will embark on his journey of entrepreneurship with certain passion. Uh, it could be a passion for the technology, for the product, for the application, whatever it could be. So the passion would always be to succeed in the business, and that is what actually drives an entrepreneur to in a business. But yes, it does not mean that you should ignore the other aspects of the business. It is important to give due importance to all the aspects of the business, right? Manufacturing setup, if that is the requirement of the business, correct investment in plant and machinery, investment in right and optimum workforce, proper systems and processes. These things will always be helpful for any business anyway. Especially and becomes important when the business assures on an exponential growth path. In absence of systems and processes, the business could become chaotic if you don't have systems and processes in place. And then after the business has grown, if you strive to set up systems and processes, it would become an humongous task. It is also important, especially for an entrepreneur, to identify the need of the funds at the right time. We could need additional investment in business for many things. It could be expanding the infrastructure, it could be to buy technology, or could be an investment in research or product development. But then the important aspect is to identify this need well in advance. Because if it is not identified in advance, then the stake sale could become a distress sale. And any distress sale means your valuation suffers tremendously. So that's a key point for any entrepreneur to keep in mind, especially when he's looking at stake sale or sale of or getting acquired, I would say. So, in a nutshell, if you have invested rightly in all aspects of the business during the establishment stage, then growth phases of the business, then it would also open up the right opportunities for you if selling up the business becomes a need or options for you. And even if it doesn't become an option for you, this investment is never going to go waste, because the business would definitely be benefited from these systems and processes.
Amazing. Absolutely good. Fantastic. What a fantastic discussion. A lot of takeaways. Before we actually wind up, there's an interesting question that's come up from Rajiv. Rajiv Success is asking, the M&A and HVAC market has been far below and few till now. I mean, compared to the kind of discussions that we're having in terms of numbers, it's really small. I mean, I open the question. Anybody feel free to take it up and answer, Rajiv, as to why do you think it's so less? I mean, is it just the beginning, or is it something that we missed out on? Mr. Ashok, do you want to take that question?
Sure, Ajit. I think, if you ask me, I can tell you, we cannot compare our industry with any other startup business. The valuation of the startup and the number of acquisition what is happening on any other startup companies are much higher compared to our industry. But I think the question was in the right direction, that even in other industries, we have seen many multinational coming and kind of establishing or buying companies in India, which has not happened in the same pace in HVACnR. I accept that, but I think things will change very soon. There are a lot, the aspects what I mentioned. I think people. There are a lot of discussion ongoing on the background. I can tell you, there are a lot of discussion happening from long time in the background, and the success rate has been very less due to many factors. I think that is how I would say. So it is not that people are not talking or doing an attempt to buy companies in our industry. So due to many factors, it has not been. It could be product, it could be the structure inside the company, which probably they look at as a big risk. It could be like the integration what I talk about. It could be a challenge, especially with the government authorities, how it is going to happen. I think with the index, ease of doing business kind of easing out, companies and the industry really kind of maturing with regard to the products, with regard to the value addition. This is going to change in a big manner, and that is also going to help in the valuations as well. I mean, people don't mind paying extra if they have the right, right product and the right company they're getting. But presently there is kind of a gap here, and I think, as I mentioned before, this is going to change very soon.
Amazing. There's another question that he's posted. He says, "Does HVAC contracting offer as an attractive proposition for an MNC company? Only Suvidha seems to have found a buyer." Mr. Devraj, you want to take this question?
Yes, I think what I believe is that the discussions are going on in the market, though the result has not been there. We have not seen the outcome. We see only scenarios of that has been there in the market. Now we see, but in the background, what I find is the discussions are going on, and many companies are discussing even with the contracting company. So it may take some time. Last 2 years have been terrible. We all know 2020 and 21 has gone in COVID and other things, but discussions are there, and we believe that there will be further some more acquisitions even for contracting companies that I see. Not only contracting company, but also as Ashok said that the discussions are going on even for the product manufacturing company. So it will happen, may take some time, but it is going to be a kind of consolidation for contracting company, and I believe also for product manufacturing company. So this is my takeaway.
Okay. So,
Amazing.
Jeet, I just wanted to add that I think the some momentum has already started taking place on the contracting side with Suvidha. ABS is another one where something like this has happened. So the start has happened, and I see this moving more and more. And again, a lot of people feel that no, the contracting company does not really have a technology, does not have assets. So how can it be valued and how will it make sense? But I would say, again, people will make a big difference. And as I mentioned, that in our industry, this your acceptance, your approvals, your past record of executing so many projects, and this plays a very vital role. And and for that reason, I believe any contracting company which has a track record, which has a big installation base, becomes an attractive proposal for some of the guys who are really looking at this. And I would say India is still in that phase where a lot of Indian companies are now, really, I would say, moving in that direction when they are, when they are better prepared to be attractive for the international buyers. As Ashok mentioned, there have been many cases where Indian MNC, I mean the MNCs tried to, but they found that no, there were some basic issues in the acquisition aspects, and that's where I think things are improving overall. You would see everybody's moving towards compliances, because one of the major factors that I see, which a lot of MNC companies really rely on, is how good are you on your compliance, how good you are maintaining your accounts, and how diligently are you doing, and whether you have those basic principles and policies aspects, which I think was to quite an extent missing in our systems, because that's how the general industry has been. But I think in general, everywhere the compliances are going up, everybody is becoming more aware, and that would make things more attractive for these, because uh, especially the MNCs are very, very conscious that they don't want to enter into a company where they could face such kind of a legal issue by any means. So,
Yeah, I guess that's the whole industry that's going through its evolutionary process. And I guess a discussion like this also brings in a lot of insights and takeaways for a lot of the entrepreneurs from the HVAC industry, as to if you are scaling up, you probably picked up some of those points which will help you exit if you choose to. So amazing discussion. I want to actually thank Sachin for putting this together, and Mr. Devraj, Mr. Ashok Das, Mr. Prashant. Thank you so much for those valuable inputs, taking time out for all our members today. It's been fantastic. I'm sure there's a lot of takeaways. To all our viewers, we'll see you again with our 20th episode. And probably next month, we'll explore why entrepreneurs actually choose to exit. Maybe that's a good one to take up, Sachin. So we've seen why people are acquiring companies. So maybe next month we'll figure out and we will have a discussion with some of the people who have actually sold their businesses and what actually got them to sell. So look forward to this. Thank you very much, everybody. Fabulous discussion, great takeaways. Thank you so much for your time.
Yeah.
Brilliant.
Thank
Yeah.
you. Thank you, everybody.
Thank you very much.
Thank you.
Thanks a lot. Yeah.
Thank you, everyone. Thank you.
Thank you. Thank you very much.